Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest energy updates and digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. And here at the Crypto Republic, we give you the bird's eye view, a satellite perspective to spot the big picture shifts while everyone else is stuck in the daily chaos. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Well, something is shifting around XRP right now, and most of the market may still be reading it the wrong way, because this is not just another crypto headline out of Japan. It may be an early signal that XRP is being pulled into a much more serious financial conversation. And the biggest shifts in finance rarely arrive with fireworks. They begin quietly, inside regulation, inside policy, inside infrastructure, inside decisions most people ignore at first. Then the market looks up and realizes the system changed before the price fully explained why. So the real question is not whether Japan made a move. The real question is this: is Japan helping move XRP from a crypto narrative into financial infrastructure? Today, ladies and gentlemen, we're breaking down XRP. News: Japan's decision could trigger a global ripple effect. And this is one of those stories where the headlines alone does not tell you what really matters. Because on the surface, it looks like another XRP update out of Japan, but underneath that, there may be a much bigger shift taking shape. A shift in how XRP is classified, a shift in how institutions can evaluate it, a shift in how the market may eventually understand it. And this is where things get interesting. This may have less to do with short-term excitement and much more to do with long-term structure. In markets, that difference is everything. Short-term noise gets attention, long-term structure changes everything. So in this video, we're going to zoom out first. We'll look at why Japan matters, why this may be bigger than a simple crypto headline, and why some investors believe this could mark the beginning of a deeper structural change around XRP. As always, I want to thank everybody who takes the time to like, subscribe, share, and comment. These few things really do help out the channel. And everyone who's new here, our videos are breaking into two pieces. At the second piece, we have a rant that everyone's come to love. Let's dissect this. Most investors think markets move because of news. They don't. Markets move because of structure. News is just a signal. Structure is what actually changes behavior. And if you look at financial history, the biggest transformations didn't happen overnight. The internet didn't change everything in a day. Electronic trading didn't replace floor traders instantly. Derivatives markets didn't become dominant in a single cycle. They built slowly, then suddenly became unavoidable. And this is what most investors are missing right now. This may not be a hype cycle. This may be a structural transition. Now think about this. In the early days of electronic trading, most investors didn't trust it. It felt risky, unclear, unregulated. Sound familiar? But once regulation caught up, once infrastructure was built, once institutions were comfortable, everything changed. Let that sink in. And the same pattern may be playing out again. Current event: Japan move. Now this is where the story shifts. Japan's financial service agency is moving XRP into a regulated financial framework, not just as a crypto asset, but under rules similar to traditional financial instruments. And this is what most investors are missing. That's not a small update. That's an identity shift. For years, XRP lived in a gray zone, too important to ignore, but not clear enough for institutions to fully commit. That uncertainty kept massive capital on the sidelines, because institutions don't operate in gray areas. They operate in clarity. Why this matters? And here's where it gets interesting. The moment an asset becomes compliant, it becomes accessible. Pension funds, insurance companies, asset managers, these aren't retail traders. These are entities that move billions, even trillions. But they can't touch assets that lack regulatory clarity. So when XRP moves into that category, it doesn't just change perception. It changes eligibility. Here's the Tokyo effect. Now this part surprised many people. Japan is one of the most conservative financial markets in the world. Capital there moves slowly, carefully, deliberately. So when Japan makes a move like this, it's not noise, ladies and gentlemen. It's a signal. This is what some are calling the Tokyo effect. Large pools of capital that were previously restricted may now be able to participate, and even in a smaller percentage of that capital enters, what could that mean for demand? A structural shift. And this is where we zoom in. XRP may be transitioning from a speculative asset to financial infrastructure. Instead of being driven by hype cycles, it begins to align with usage, liquidity, integration. And this changes everything because pricing is reacting. The system is evolving. Infrastructure build. Now let's talk about what's happening behind the scenes. SBI Holdings, led by Yoshika Kitao, has been building this infrastructure for years. Banks in Japan are not just watching XRP, they're participating, running validator nodes, integrating systems, testing real use cases. And this is where things get really interesting. When institutions don't just use a network, but help run it, that's when adoption becomes real. Tokenization. At the same time, we're seeing a rise in tokenization. Assets like bonds, currencies, real-world assets moving on-chain. And if multiple assets exist in a digital ecosystem, you need a bridge. That's where XRP comes in, providing liquidity, connecting value, reducing friction. Institutional capital. And here's the next layer. Institutional capital is already starting to enter through structured products. Long-term investors, portfolio managers, funds. These players don't chase heights. They build positions. And when they hold, they reduce available supply. Risk's important, but let's be real. This is not risk-free. There are challenges. Escrow supply releases, competition from stablecoins like RLUSD, DeFi ecosystem lag versus Ethereum and Solana, changing investor expectations, and that is what most investors get very wrong. They expect explosive moves from something becoming more regulated. Here's the final shift, and this is the key takeaway. We may be watching XRP move from speculation into structure, from hype into infrastructure. So now the question becomes, ladies and gentlemen, is this just another XRP headline, or are we watching the early stages of a much bigger transformation? Because if this shift continues, the conversation around XRP may never be the same again. If you got value from this, hit like, subscribe, and drop your thoughts below, because the biggest opportunities are usually hidden in structural change. So remember, short-term noise, long-term structure. Always try to pay attention to what's quiet, as we say. Well, I hope everyone's having a happy Monday. Got a lot happening right now. I want to welcome all the new members of our Patreon, all the new members of our membership channel. It's great chatting with everybody. There's a lot to discuss, so I'm going to get right into this. Ladies and gentlemen, the economic damage caused by this war will stretch to the end of the decade, and shortages will go way beyond oil, gas, and fertilizer. I mean, we're tracking the next shortage that we're going to put out right now with the tips from the pits and anyone that changes any capacity that we're playing. Ladies and gentlemen, remember, one good tip from the pits can easily pay for your entire year subscription. If you want the deeper macro research and learn how to take advantage of all this, please do come over and join over 450 active traders and investors in the Patreon, the Crypto Republic Desk Monthly community. And welcome to everybody joining, people who have decided to get off the sidelines. Ladies and gentlemen, even if the Strait of Hormuz opened tomorrow, and that is certainly not going to happen, we're being warned that the economic impact of this war will be felt all the way through the end of the decade. For anyone who's brand new here, you're going to have to go back and look at the previous rants because they all tie into each other and what we're talking about. A lot of the infrastructure has already been destroyed during this war, and it's going to take years to rebuild if it's ever rebuilt. And the crop losses that we will experience in 2026 due to the lack of fertilizer will be felt long into 2027. Like I said, normally, like the same way in Patreon, we're giving out crop reports because that's normally what we're looking at, planting seasons. But the shortages that we're facing go way beyond just oil, natural gas, and fertilizer. As you'll see, we're also facing unprecedented shortages of pharmaceutical drugs, plastics, and other vital important goods, unfortunately. So a global nightmare has already begun, unfortunately. And if the Strait of Hormuz doesn't get open soon, it's going to get a lot worse, unfortunately, in our opinion. So stick with us and understand that how people capitalize off of this. If you look at the commercial traffic through the Strait of Hormuz, it's fallen by 95%. So daily transits through the Strait of Hormuz have fallen some 90% to 95% since the conflict began. So according to shipping intelligence firm Kepler, hundreds of tankers are trapped in the Persian Gulf. Iran's allowed a limited number of vessels to pass through the strait, but other than that, commercial traffic has essentially been paralyzed. So if you look at how this is affecting the availability of oil, natural gas, and fertilizer, which I've ranted and raved about in the last bunch of videos, and we've taken advantage of this in the Patreon and anyone who intends any capacity, gasoline prices now are joining. They're soaring soaring, and diesel prices have begun going nuts as well. So if you look at from March 2nd to 26th of 2026, the average nationwide price of U.S. regular gasoline rose from $3.01 to $3.96 per gallon. Let that sink in. Why diesel fuel rose from $3.89 to $5.37. So diesel prices matter to consumer costs because diesel engines power trucks, farm machines, construction equipment, fishing vessels, and many of the vehicles that carry domestic freight. So when items become more expensive to harvest, build, and ship, diesel costs spread quickly into grocery, households, and building materials. But the supply shock has not just been limited to oil, natural gas, and fertilizer. The CEO of Dow is warning that a global supply crisis is hitting a wide range of industries, and he is projecting that it could take 250 to 275 days to unwind this mess once the strait gets opened. Let that sink in. You're talking 250 to 275 days. It's almost a year. So cause and effect, stay with me. Again, that's why being the financial mercenary and being the remora that we are. We have the Gucci clarity. We got the Gucci conviction. We're marching up this frosty mountain with our frosty beverage, and we have no fear because we know why things are happening and the cause and effect. We understand because we've done our research. We have our recce. We have the macro numbers. We have the levels. We understand what we're doing, why we're doing, when we're going to do it. Nothing that happens surprises us anymore. We have watched the prices go from ranges 2 times now, 3 times. So, ladies and gentlemen, petrochemical prices spiked, and shortages from the Iran war will likely cause inflationary effects at least to the end of this year on construction materials, consumer goods, automotive, aerospace industries, and much more. The CEO of chemical manufacturing giant Dow said, while much of the global supply shock is focused on oil, natural gas, fertilizers, and even helium, we went over that in last video, for semiconductors, almost 20% of global petrochemical capacity is blocked from the effective closure of the Strait of Hormuz choke point. So, according to the Dow chair and CEO, Jim Fillering, the die has been cast for the rest of the year for what's going to happen in the markets. He went on to say at the Sierra Week by S&P Global Conference in Houston, it's like the unwind we saw in supply chains during COVID. Let that sink in. It's crazy. You could be in for 250 to 275 days. This is not going to be an instantaneous rewind. So, of course, all of economic infrastructure that has been destroyed on both sides will not be rebuilt in 250, 275 days, ladies and gentlemen. So sadly, the truth, it's going to take years to fully rebuild all the infrastructure, even when the war ends, and depending on that. So we're in the camp that we agree with what he's saying 100%. That's why anyone that retains any capacity, we're taking advantage of every situation that this is causing. Because unfortunately, we have to live through the chaos that the powers that be have caused. So, in our opinion, it's better to prosper and take advantage of these situations if you can. So we agree with the impact of this war, unfortunately. It's going to stretch, as far as we're concerned, to the end of the decade. Nothing's going to be the same in our opinion. Not advice, just my opinion. The closure of the Straits of Hormuz threatens roughly a fifth of global oil supply and the liquefied natural gas trade. But it's not only the price at the petrol pump that will hit your pocket. The disruption to shipping may cause shortages of everything from food and beer to medicine and MRIs. We went over that. Even if the Strait reopened tomorrow, the damage to energy facilities from missile strikes will take years to repair. And the uncertainty how the war will end, one thing is certain. The economic effects will stretch until the end of the decade. Let that sink in, ladies and gentlemen. People are positioning for the end of the decade in all of these things downstream from everything. Most people in the Western world have no idea, unfortunately, how this war can potentially affect their daily lives. At this stage, as far as we're concerned, there could be shortages of some serious pharmaceutical drugs. Rising price energies will affect the pharmaceutical industry, where energy accounts for as much as a quarter of the cost of manufacturing raw ingredients, unfortunately. But the flow of crude oil by byproducts, such as the petrochemicals used to create nearly 90% of these ingredients, is also affected by Strait's closure. So India, known as the pharmacy of the world, is relying on Qatar for about 40% of the crude oil imports used to create such petrochemicals. Generic medicines, including antibiotics, blood pressure, medications, paracetamol, and diabetes drugs such as morphine, are the greatest potential risks. Drugs requiring refrigeration during transit, including most vaccines and cancer medications, typically flow through Dubai and Doha airports, so airspace closures compounds the crisis. Let this sink in, ladies and gentlemen. I'm trying to take the PhD out of here for the PhD, because every day you got to understand, as mercenaries, as financial mercenaries, we study everything to understand where everything is going. Because, ladies and gentlemen, in finance, there is no prisoners. Either you are successful in a transaction and you account grows, or you are not successful in a transaction and your account shrinks. This isn't something that will start. This is something that will start happening many months from now, unfortunately. In fact, it's being reported that in the UK, they're just a few weeks away from experiencing drug shortages, unfortunately. Britain's a few weeks away from medicine shortages ranging from painkillers to cancer treatments if the Iran war continues, according to experts. Drug prices will also rise. Again, none of this financial advice, just our professional opinion. Most people out there seem to think that conditions will return to normal soon. We're not in that camp. So in a way, it's a good thing because you have to understand why when I say it's a good thing, knowledge is power. It's not good what's happening by any stretch of the imagination, but it's good if you're here with us learning and listening and taking notes so that you can prepare for yourself again. Because, ladies and gentlemen, when reality starts to set in, there could be panic, and we could also see a global supply crunch for various types of plastics. Another product frying from crude oil is naphtha, NAPHTHA, often called the mother of plastics. It's primarily transported to Asia and used to create ethane, propane, and benzene, which play a role in manufacture of plastic bags, bottles, food containers, IV bags, synthetic fibers such as polyester, and even medicines such as antidepressants, antiepileptics. Roughly 2/3 of Asia's own requirements originate in the Gulf. Let that sink in. How many of the products that you regularly purchase come wrapped in plastics? Comment below. How many products that you buy come in plastic? So think about that for a moment. What's going to happen when manufacturers are not able to get plastic? It's crazy. Ladies and gentlemen, how not to get caught up like sushi. And like I said, one good tip from the pits can easily pay for your entire year subscription. If you want the deeper macro research and learn how to take advantage of all this, do come and join over 450 active traders, investors in the Patreon, the Crypto Republic Desk Monthly, and welcome to all new members. And at the end of the day, the whole world is taking advantage of what's happening in any capacity, if they can. And you got to understand this. People are going to get cut up like sushi. And I'm going to go over right now, silver, XRP, gold, how all this goes into place, because crude oil at right now, 104, the time of recording of this, gold moving higher. Ladies and gentlemen, XRP is the anointed coin. When Operation Printed to win it, and this is in the rearview mirror, we're going to look back on these days saying, wow, I wish I could have bought more. But you got to understand something. The next big thing that we're looking at right now, and this is massive, we're going over this in the Patreon and tips from the pits, massive, anybody that retains any capacity. I cannot believe I give this stuff away for free. But then again, I love our wolf pack growing in our community. Ladies and gentlemen, today's tip, write this down. If you're taking notes on this, you have such a free playbook of how to make alpha from this. Iran's attack on aluminum producers are sending shockwaves to the metals market. Two of the Gulf's largest aluminum producers came under fire from Iranian drones and missiles on Saturday. Aluminum rose to a 4-year high on Monday as the attacks raised fears of a global supply shortage. Let that sink in. 9% of global aluminum supply comes from the Gulf, and most firms have been able to export the metal across the globe since the Strait of Hormuz is effectively closed. Ladies and gentlemen, it's massive, massive. Aluminum closed in on prices not seen since 2022, following Iranian attacks on two Middle Eastern producers over the weekend, heightening fears of a supply crisis for the industry. So future prices on the London Metal Exchange initially jumped 5.5% on Monday to briefly touch 3,492 per ton, a price last seen in April 2022. Pulled back slightly by Monday afternoon to land at 3.5% higher at 3,381 per ton. Aluminum has risen around 10% since the conflict began on February 28th, though it fell briefly last week alongside most other asset classes. Ladies and gentlemen, the Emirates Global Aluminum, EGA, and Aluminum Bahrain, two of the Gulf's largest producers, came under fire from Iranian drones and missiles on Saturday. EGA said in a statement that its smelter, Al Tawila smelter, sustained significant damage in the strikes, injuring several people. So the safety and security of everyone over there is their top priority, according to the CEO. We have to watch what happens. So, ladies and gentlemen, there's shock waves going through the global market. You got to understand something. This attack on Saturday served to darken the outlook for commodity firms in the region, which has faced some severe supply disruptions. So you got to understand, things to remember, 9% of global aluminum supply from the Gulf. Most firms have been unable to export the metal beyond the region since Iran effectively closed the strait. EGA's damaged smelter produced 1.6 million tons of cast metal in 2025, according to the statement. Unbelievable. Unbelievable. What a time. The attacks have sent shockwaves to the global aluminum market, rising the risk of supply crisis that could reshape the industry. So you got to really look at this. This is just, if the damage, in our opinion, is lasting, the market's going to move away from any temporary softness and begin to reflect expectations of type of supply. So as far as we're concerned, as we move further down the timeline, you really got to understand that the base case for the attacks assumes a cut to the current running capacity of approximately 20%, which amounts to roughly 800 to 900 kilotons of production loss in 2026. This is real bad. So it's sufficient to push the global market into a full year deficit, and it's pretty bad. So if you look at the role of China, aluminum is an essential material across electronics, transport, and construction, as well as other industries such as solar panels, packaging. China is the world's biggest producer of aluminum and tends to keep production constrained at 45.5 million tons per year to reduce emission and prevent overcapacity. So if you look at this, somehow there's a lot going on. So there's word on the street, and this is just an opinion, don't hold my feet to the fire. The Chinese government decides that prices are too high, they can restart a number of idle smelters in the country, and that would be full volume of aluminum. But again, we really got to see what's happening, because China's ability to ramp up supply is limited. There's another thought on the street. There's some extra capacity, but the global market remains exposed to further shocks. Ladies and gentlemen, we're going to take full advantage of the chaos that this is causing, because this is what people are doing in the world. You got macro traders taking advantages. Hedge funds got cut up like sushi with their last filings for things they were playing. So you got to remember, people are going from the path of least resistance for their trading, right? So now, as we look at what's going on, again, how not to get cut up like sushi, you see the ranges in assets. You see the research in assets. Again, you wait for the proper conviction that's Gucci for you, so you do not get cut up like sushi. You will be in a world of misery and getting cut up like sushi. You will not get cut up like sushi by being patient. Small trade sizes. Again. Ladies and gentlemen, I'm not going to give out the tips that we're giving out to. If you want to see those tips, do come and join us in the Patreon, because this is going to be fantastic what's happening with these plays. Again, you know, I don't have enough time to go over all these things, but I want you to understand something right now in the market. And XRP, HBAR, ICP, these are the anointed coins. The world is changing in front of your face. It is. Having a direct plan, taking advantage of this is very, very important as far as we're concerned. If you want to learn how to do this, do come and join us. But right now, you got to understand something. Let me be very clear with you. You think silver is just cheap gold? You think this recent sell-off is just noise? If you think volatility is something to avoid, ladies and gentlemen, you are really behind, because we're witnessing right now in the silver market is not random. It's systematic, structural, and deeply misunderstood. And today I'm going to break it down using real institutional data, because the reality is silver is not broken. Your understanding of it is, okay? Look at the current dislocation. Let's start with just happened. Silver just got dragged down in a broader liquidity-driven sell-off across precious metals. We saw prices drop towards $60 per ounce, sitting just above the 200-day moving average at $58. Now, most retail investors see that and panic, get cut up like sushi, unfortunately. But institutional desks, they see something very different, because this wasn't about fundamentals. This is about liquidity stress. When geopolitical tensions escalate, like what we're seeing in the Middle East, capital doesn't ask questions, it runs. And silver, unlike gold, is not treated as a primary liquidity hedge. That's your first key insight. Silver gets sold not because it's weak, but because it's liquid. Again, the volatility nobody understands. Let's talk about the elephant in the room, volatility. Silver is currently running with realized volatility around 85%. Let that sink in, 85%. That's not commodity volatility, ladies and gentlemen. That's crypto-level volatility. And for most investors, that's a red flag. But for institutions, that's an opportunity, because volatility is not risk. Volatility is a pricing mechanism. And right now, implied volatility is sitting around 55 to 60%. That means the option market is paying you heavily to take the other side of fear. Let that sink in. It's massive. This is why institutional strategy hasn't changed. They're not chasing price. They're selling downside risk for yield. Again, so if you look at the gold-silver relationship, let's zoom out. Silver does not exist in isolation. It moves with gold. And right now, the correlation is above 0.8. That's so high. And here's where it gets really interesting and spicy. The gold-silver ratio moved from 56x to nearly 70x before settling around 63x. Translation in English? Silver has underperformed relative to gold, but not dramatically. And that tells you something critical. This is not a collapse. This is a relative repricing. Institutions expect the ratio to hover around 70x over the next 12 months, which means silver upside is still structurally tied to gold trajectory. So if you look at the demand problem, here's where things get uncomfortable. Yes, they do. Over 50% of silver's demand is industrial. That's a problem because when growth slows, when global growth demands weakens, when uncertainty rises, industrial demand gets hit first. This is why the report is very clear. Short-term risks are skewed to the downside. Even more interesting, there was an expected 300 million ounce deficit in 2026. And now the deficit is at risk of shrinking. Why? Why? Because demand is not keeping up with expectations. So in the short term, silver is fighting weak industrial demand, investor hesitation due to volatility, liquidity-driven selling. That's a brutal combination. So if you look at the ETF flows, they tell the real story. If you want to understand what's happening, really happening, don't look at price, look at the flows, look at the flows, look at the data. Silver ETFs have seen outflows of 64 million ounces, roughly 7.5% of peak holdings. Compare that to gold, less than 3% decline. That's not a coincidence. That's positioning. Investors are de-risking silver faster than gold. Let that sink in. Come on. And futures positioning confirms the same trend. But here's the twist. Despite all that selling, silver has only marginally underperformed gold year to date. That tells you something powerful. There's underlying support. So if you look at the long-term bull, in our opinion, I want to flip the script for a second because everything I just went over is far to short-term. So, okay? And if you're only thinking short-term, you're missing the entire trade, ladies and gentlemen, and what we're looking at. You're missing this Gucci perspective and Gucci clarity. Come on, stay with me. The long-term thesis is intact, arguably getting stronger. Why? These structural drivers, real rates and debt. We're entering a regime of lower real rates. Massive sovereign debt expansion, structural currency debasement. That is fuel for real reasons. Energy transition. But here's the big one. Silver's not just a metal, it's a strategic resource. The photovoltaic demand currently makes up about 15 to 16% of total demand, and it could rise to 20% over time. That's huge because if fossil fuel systems become unreliable, capital flows into solar. Solar runs on silver. Supply constraints. Even when demand uncertainty, the market is structurally tight, and any resurgence in demand will hit a constrained supply base. So let's look at the price outlook. Now, stay with me. Not financial advice, just my perspective, and anyone retains any capacity, in my opinion. Not financial advice. Now, let's talk numbers. Institutional forecast, June 2026, $100. September 2026, $95. December 2026, $85. Let that sink in. From 60 to potentially 100. That's not a slow grind, ladies and gentlemen. This is not financial advice, just my opinion. Anybody retains any capacity. That's a volatility-driven expansion. But you won't capture that move if you don't understand how this market trades or moves. The real message, ladies and gentlemen, I want to leave you with this. Silver's not a safe haven. Silver's not a stable store of value. Silver has a high beta expression of macro instability. And right now, we're entering a world defined by geopolitical fragmentation, energy disruption, monetary instability, which means one thing. Volatility is not going away. And in that world, the winners are not the ones who avoid volatility. They're the ones who price it, sell it, and monetize it. So next time you look at silver, ladies and gentlemen, you think it's too volatile, just remember, the volatility is the opportunity. And if you don't take it, someone else will. Ladies and gentlemen, I want you to understand something, what I just went over. If you want to understand how to take advantage of everything we just said, because I know I speak very fast, because at the end of the day, I feel bad not being able to come out with videos every day because we want to be here every day with you, but we're tied to the phones and there's so much happening right now with everything that we've outlaid to the family offices and institutions that retain us and we consult for every day because the things that we've been saying months in advance are transpiring. So that's why we're married to the phones. But if you want to understand all this, ladies and gentlemen, do come and join us in our Patreon. Again, one good tips from the pits will pay for your year subscription. Again, join us at the Crypto Republic desk monthly and join the over 450 active investors and traders who have joined and they're learning to take advantage of this because the winds of chaos are blowing, ladies and gentlemen. And there's nothing that we can do to stop that. So if the storm is here, you might as well set sail as far as we're concerned. And I want to understand something. And I want you to understand something. As always, this content is for information on entertainment purposes only. It should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making any investment decision. Ladies and gentlemen, do you understand that the table is being set for the new financial system? You understand? I read the comments, and a lot of people think that XRP is a circus coin, that it's used for Ripple exit liquidity to buy more firms. Do you understand that Ripple, and I just want to give you a contrarian point of view. I hear you. I understand you. I'm on your side. Everybody that's in the wolf pack here is on your side. We pack up together. Remember that. We pack up together. But as they have built this phenomenal ecosystem with products that they're showing the new world for what it's going to be in finance, as far as I'm concerned, in my capacity. I was telling a family officer, do you understand when they open the floodgates to use all their technology for what they built, what's going to happen? It's going to be magnificent, ladies and gentlemen. It's not going to be overnight, but it's a revolution in how financials are used. Again, the only thing that's constant in this world is change. Change. I watched the floor of the New York Mercantile Exchange disappear from when I was 15 to growing up trading. It's gone. I remember saying to myself, if I was ever in the capacity to take advantage of the next financial floor disappearing, I was not going to miss that. There's no way. But patience is your friend. Your mind must be turned to steel so these thoughts that vex you are thrown out. Again, the world is going to change. It's changing right now. The biggest thing that we pay attention to, the credit problem, what's happening with private credit, all the things that we go over. I go over the day-to-day things because we like to take advantage of the chaos and capitalize off of that in every market that we can. And at the same time, we like to DCA and take positions of assets that are at rock bottom prices because the finance market's a seesaw. One day, woo! Next day, ah! Woo! Ah! So everyone's saying, I don't like this coin, you suck, this is no good. Who cares? Cares? Drown out the noise. Gucci conviction, Gucci clarity. You will not get cut up like sushi. When the floodgates open, and they're going to open, things are going to change. Ladies and gentlemen, right now, we're too close to the changes happening with this week that there could be ground troops and something could be dramatically different. So with that narrative really hanging on here, you really got to be disciplined with what may or may not happen. You really have to. There's a lot of moving pieces, and we've been talking about, we were one of the first people to talk about them taking that island because I study these weird things, and if you look back, it's not a contest. The only contest did your trading account go up. And I salute everybody else in the XRP Army and every other XRP channel out there that's got the confidence to go out and keep doing this every day and telling people what they're doing and why from a playbook, from their own playbook. Again, I salute you. Why? Because you don't got to do this. You can sit there at the lunch table and say, I don't got to share anything with you. No throwing mud at anybody. But if this goes down the way that we've been talking about it this week, there could be whipsaws that are going to be nuts. So again, stay frosty. Stay conviction, frosty. You will not get cut up like sushi because we're the remora. Remember, you want to see how to take advantage of this and you're still here, come and join us on Patreon. I love you all. I'll see you on the front lines. The game is changing, and those who understand it first will benefit the most. Make sure on the right side of it, you have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves they'll never happen again, or you could be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly but intentionally, because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink because the world is distracting you with noise while XRP continues to develop behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. If this opened your eyes, smash that like button, ring that bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic. Love you all. See you on the front lines.